Hello students, this video is for BBA third year finance specialization students and we will discuss SAPM subject. Now student, today's video will be very useful because in today's video we will discuss all the glimpses of your unit 1 which will be very helpful to you in the internal exam. Dear students, as you all know, very soon your internal exams will be conducted through online mode. So it is very essential for us to have a close look so far as an overview of your SAPM subject is concerned. So that's why in today's video we will discuss the revisions of your unit 1 regarding your SAPM subject. Now, dear students, so far your unit 1 is concerned, your unit 1 consists of various things that includes your securities market, shares, debentures, bonds, stocks, mutual funds, and secondly it has another important aspect which is known as your stock exchange, its features, functions, role, and other few terms like OTCEI, that is over the counter exchange of India, integrated OTCEI, all those things is there in your unit 1. So if we conclude, if we summarize your unit 1, unit 1 basically consists of your Indian financial system or Indian financial market. Now let's discuss what is financial market and how it is properly be classified. Now the financial market is broadly be classified into money market and capital market. Just I am giving you the highlights. I have already explained the detailed course, so just we will have a glimpses of your studies. So financial market basically are of two types, money market and second one is your capital market. Financial market broadly be classified two parts, money market and capital market. Very important classification. Now dear students, the money market have further be classified into two parts. What are those? Organized sector and unorganized sector. Now under organized sector we will discuss it. I will explain you all the terms in a very little manner. Just I am completing the chart. So again it has certain further classifications like your commercial paper. So again, the organized sector have certain separate sub-classifications like treasury bill, call money or notice money, commercial paper, commercial bill, certificate of deposit, financial institutions. Now, unorganized sector are some the examples you may say money lenders, indigenous bankers, financial institutions, and a capital market. Primary market and secondary market. Capital market basically we are classified into two parts: primary market and secondary market. Now, this is the chart which shows the classification of your financial market. So, dear students, the financial market, as you can see, is broadly be classified into two parts. Number one, money market. Number two or second is the capital market. Your money market again are of two types. Number one, organized sector. Number two, unorganized sector. Under organized sector, we have different classifications like your treasury bill, then call money or notice money, then certificate of deposit, next commercial papers, commercial bills, like this. Next, unorganized sector. Unorganized sector are those sector which includes your money lender, private firms, private institutions, financial institutions, indigenous bankers. This is all about money market. Now move to the capital market. Capital market, you can see from the chart, broadly be classified into two parts. Number one, primary market. Number two, secondary market. Now we will discuss each one by one the meaning or basic concepts of every term that we used in the chart. First, financial market. Indian financial market forms a major part of Indian financial system. So there is no such huge difference between Indian financial system and Indian financial market. First, let it be very clear. Financial market means, or financial market implies that it is forms a major part of the Indian financial system. So whenever we will talk about the Indian financial system, we will definitely talking about the Indian financial market. Now, financial market or this financial market is a market where financial securities are traded. Let's take one practical example. Every day, a common man goes to the vegetable market for buying different vegetables for day-to-day consumption. Now, when the man or the human being is requiring certain grocery items, he is visiting the grocery shop or goes to the market for buying the different grocery items for his day-to-day home consumption. Similarly, whenever a person thinks about investment, Whenever a person thinks about money, either two ways, I'm talking about two ways, either for investment purpose or for borrowing purpose. So when the person is having certain amount of money and he wants to invest, and the person wants to invest, or another person who wants some money for his business, or who wants some money for borrowing purpose for any other activity. Now in that case, the person, it means both the persons have to choose for the financial market, have to choose for the financial market. So just like your vegetable market, just like your grocery market, it is nothing but a market where financial securities are being traded, where financial securities are being traded. So whenever the persons want to invest his own money, he has to choose or think about financial market, or wherever the person wants to take some money or want to uh, make a loan for his own requirement, then also he is thinking for the financial market. So in simple words, financial market is a market where the financial securities are being traded. Now the question is very simple: what are the financial securities? Dear students, it's very simple answer. Financial securities include your these are the various examples of your financial securities. Examples: shares, debentures, bonds, mutual funds, which nowadays a very popular securities. Every day we are using so many ads to invest in mutual fund, but mutual fund investments are having certain amount of market risk. So you should be very careful before investing in the mutual funds. No doubt, mutual funds offer certain high amount of return, but it always includes a high market risk. So if you talk about the financial derivatives or financial products, or what are the financial products, it includes shares, debentures, bonds, your generally government bonds, and at the end your mutual funds, which is nowadays a very popular security. So now we have understood what is the meaning of the financial market. Now, as I say, financial market have two basic classifications. Number one, money market, and second one, capital market. Money market. Dear students, what is money market? I am discussing the meaning right now. Money market is a market which is usually for short-term purpose. Very simple answer or very unique answer. Money market is a market where funds are being traded for a short-term period. For a short-term period. Short-term period means generally from one day, yes, single one day, from 1 day to 1 year. So here under money market, the securities are traded for a short-term period, generally from 1 day to 365 days or 1 year. So it is a market for short-term period. One day to 1 year. Money market is a market where short-term securities are being traded generally from 1 day to 1 year. Now talking about further classifications, money market is a two further classifications: organized sector and unorganized sector. Dear students, the money market in India is totally regulated by Reserve Bank of India. This money market in India is being regulated by the RBI, that is Reserve Bank of India. So RBI forms different rules and regulations for the securities that is going to be traded under money market. So we can say money market is totally controlled by the Reserve Bank of India. Earlier, the Reserve Bank of India is not having a proper control, but now or at present, the RBI has a major control of the money market. So all the instruments that are being traded under money market has to follow the guidelines as timely time given by the Reserve Bank of India on time to time basis or on a revised basis. I mean to say revised basis, fine. So organized sector and unorganized sector. Dear students, very simple. Organized sector. From the name itself, it is quite clear that organized sector means those sector which is influenced or totally having a proper control, or the securities that are traded on the organized sector is in a systematic manner. Now, what are the various components or what are the various instruments that are being traded under organized sector? The number one is a treasury bill. What is treasury bill? I am just giving you various shortcut meanings. Treasury bills is the bills where the investors are allowed to invest for a period of more than 14 days, or for 185 days, or for 365 days. Remember the dates. For 14 days, they have the option 1, option 2, 185 days, option 3, 365 days. So the investors can easily opt any one out of the three options and accordingly invest their money in the treasury bill. Generally treasury bills are issued by the central government. The treasury bills, or in short form we say T-bills. So treasury bills or T-bills are issued by the central government. A negligible amount of interest has been provided by the central government, because unless otherwise no interest has been provided by the government, then why somebody or some investor will invest in treasury bills? So definitely the government is providing certain amount of interest on the treasury bills. Now, call money and notice money. From the name itself, call money or notice money, it is a market or it is an instrument. It is an instrument, not market. It is an instrument where the securities are traded from one day. Here I am written now one day. Under money market, the securities are even traded for one day. So, the call money is the instrument where the securities are traded even for one day, one single day to 14 days. So maximum maturity period is 14 days. 14 days, 1/4, only 14 days. So under call money or notice money, the investors are allowed to invest for a period of 1 day to 14 days. But generally, students remember, this call money or notice money is not suitable for individual investors. Rather, for corporate units, it means companies. Between banks, the bank can easily make transaction between themselves, or the corporate units, if they require some amount of money, so they can borrow a call or a notice money. If you ask me, sir, can a common investor invest in call money? The answer is yes, but generally no investor, I should say no investor will invest in call or notice money. Because why the investor will invest his amount or entire amount for a period which is having only 14 days? No individual investor will be interested. Rather, it is suitable for the corporate units, or you may say in between different banks. So banks and big corporate units will be the customers of call money or notice money. Then comes commercial paper and commercial bills. These are the instruments which are issued by the money market for a period from 185 days to 365. Remember, 185 days to 365 days. Again, I should say this commercial paper and commercial bills are again suitable for big corporate units, big partnership firms, or big units, big firms. The single or individual investors will not want to invest in commercial paper or commercial bill. Then comes COD, Certificate of Deposit. These are nothing but the instruments that I talk about. Certificate of Deposit, in short form, it is also known as COD. The CODs are also issued by the Reserve Bank of India under for the betterment of big corporate units. A negligible amount of interest has been provided. So these are the various instruments that have been traded under money market. But students, remember, under money market, it has very low risk. Generally, the risk is very less. The risk is very less. Very less risk. Dear students, as you discussed in Unit 2, since there is very less amount of risk or low amount of risk also automatically lead to very low returns, because since the investors are not taking any higher amount of risk, so automatically the return will also be very less. Low returns, because low risk, it automatically leads to low returns, so the return is also very less. As I just said, that all the instruments, if the investors invest in all those investments, a very negligible amount of interest or a very small interest is chargeable or is provided by the respective investor or to the respective investor by the government or the authority which issues these instruments. A private firms or a private company can also issue these instruments, but subject to the conditions of regulations of RBI. Regulations of RBI. Now this is all about organized sector. Now comes to unorganized sector. We are discussing the money market, not discussing the capital market and not gone yet. Just discussing the money market. And second one, on unorganized sector. Dear students, from the name itself, it is quite clear that unorganized sector means those sector which is on in unorganized form, generally money lenders, financial institutions, indigenous bankers. When you say private bankers, the term indigenous banker means private banks. They provide loans to the investor. But the thing is that since the name is unorganized sector, so they charge very high rate of interest. Very high rate of interest, because nowadays also, if you borrow money from the money lender in different villages, all in and in towns also, generally they charge very high amount of interest. Till now the system is there. Till now people are preferring to the money lender instead of going to the commercial banks. The simple reason behind it is commercial banks require lot of rules and regulations, mortgage, their personal income, their status, their wealth position, all that will be seen by the commercial bank, and then only the loan will be provided. But the money lenders, it means individual persons, generally don't ask for such things, but the thing is that they are taking the undue advantage of this fact, because they are charging very high rate of interest, almost 5 times interest as compared to the market rate. Suppose at present, if you take money from the commercial bank, generally interest rate is 13 to 15% per annum. But the money lenders will charge interest rate of 25% to 30%. So where 14%, where 30%, almost double interest is charged by the money lenders. Similarly, indigenous bankers, other financial institutions are also charging very high amount of interest. But still, as I said in today's class, that this is controlled by RBI, so RBI is taking all the necessary steps to prevent such things. But practically speaking, till now, it is not totally stopped. Still, there are private money lenders who provide money to the needy and very poor people in the villages, and generally charge very high amount of interest on the money so borrowed. So this is all about money market. Now we will discuss or move to the capital market. Students, the capital market are of two types. Number one, primary market. Number two, secondary market. What is primary market? What is secondary market? Let's discuss it. Primary market and secondary market. What is primary market? So dear students, primary market is the market where the new securities are traded. New securities are traded. Just go through the line. Where the new securities are traded for the first time. New securities are traded for the first time. So when the company is issuing new shares, X Limited is the company which issues shares to the general public. So it will run in a market that is known as a primary market. That is known as a primary market. So just remember, primary market is a market where the securities are traded for the first time. So since always new issues are made or fresh issues are made under primary market, so this market is also known as your new issue market. This market is also known as new issue market. What is the reason? Because under primary market, always new securities are traded. Securities include shares, stocks, bonds, debentures, mutual funds, which is very popular right now. So since the securities are traded for the first time or fresh issues are made by the company, so we also call it as a new issue market. We also call it as new issue market. One thing, money market is controlled by REBI. Money market is controlled by the RBI, Reserve Bank of India, but capital market is controlled by SEBI. It is controlled by SEBI. The full form is, number of times I am telling you, Security Exchange Board of India. It is an interview question also. Remember, SEBI stands for Security Exchange Board of India, SEBI. So the capital market is controlled by SEBI. So it has to follow all the guidelines, rules, regulations that are being provided by the Security Exchange Board of India. So the capital market is the market where the primary market and secondary market always exist. Primary market and secondary market always exist. Primary market means the market where new issues are made or when the securities are traded for the first time. It is known as primary market. Hence, we also call it primary market as the new issue market. So, then what is secondary market? So it is a market where the outstanding securities are traded. It means under secondary market, the investors can sell their securities to another investor. But in the case of primary market, the investors are directly linked with the company because the company is issuing the security, investors are directly buying the securities from the company. But under secondary market, the role of companies are very less. Rather, the individual investors can sell their own security to other investors. If one particular investor can easily sell his or her security to another investor, which is known as the secondary market or under secondary market. So here the investors are allowed to resell the securities that they are already purchased on the primary market. Already purchased from primary market. Let's take one practical example. RAM directly purchases 10,000 shares worth rupees 10 each from X Limited under. So it is the case of primary market because Mr. Ram directly buys 10,000 units of shares at the rate 10 each, at the rate of rupees 10 each. So the cost is 1 lakh. Now subsequently, suppose Mr. Ram wants to sell 3,000 units of share. To whom Mr. Ram will sell? Mr. Ram has to choose one investor at first to whom he wants to sell his 3,000 securities out of the 10,000 units. Now when Mr. Ram sells 3,000 units, suppose to another investor whose name is Mr. Syam, this transaction takes place under secondary market, or it is an example of your secondary market where the investors are able to exchange their securities in between themselves. So outstanding securities are traded. Here no fresh issues are made. So this is the primary market and this is secondary market. If you talk about the instruments that are being traded under primary market, fixed deposits, government deposits, government bonds, etc. So fixed deposits, your government deposits, government bonds are the examples of a primary market. So under primary market, the risk is very less. Since the risk is very less, again the return is also very less. Then under secondary market, the securities are generally traded, which includes your shares, which includes your debentures, which includes your mutual fund. Now dear students, by investing on the securities, the risk is generally relatively high. So since the securities are relatively high, the investors are also able to get higher return while investing in the secondary market. Primary market may also issue your shares, debentures also. So when the shares, debentures, mutual funds are issued generally in those securities, just writing here shares also, shares, debentures, mutual fund. But under these three, what I mean to say, under these three, very low risk. But under this here, that is shares, debentures, mutual funds, very high risk. Very high risk. So since risk is very high, so automatically the return is also very high. And the securities market, major component of the secondary market is your stock exchange. One of the major component, remember students, one of the major component of your secondary market is the stock exchange. Is your stock exchange. It's one of the major ingredient or major part of your secondary market. So dear students, in today's video, we have seen a complete overview of the Indian financial market or Indian financial system, how the Indian financial system runs and what are its classifications. We have discussed it with the help of a chart or diagram. So just go through today's video for your internal exam point of view. This was a revision video, so just go through it and also write the notes that I already sent you while discussing these things. So dear students, just go through it very carefully, which will be very helpful for your internal exams. That's it in today's class. Thank you.